Talk about crypto. So this week, the SEC took serious action against Binance and Coinbase. Pretty significant, pretty loud. SEC filed 13 charges against Binance entities and the founders, CZ. Charges include operating unregistered securities exchanges, broker-dealers, and clearing agencies, misrepresenting their trading controls and their oversight on the Binance US platform, and the unregistered offer and sale of securities. The next day, they sought a temporary restraining order to freeze Binance's US assets. And then on Tuesday, the SEC sued Coinbase over their exchange and their staking programs. Stock dropped 12%. The SEC said that the company was operating an unregistered exchange and broker, and that 13 of their assets listed on their platform were considered crypto asset securities. Brian Armstrong obviously has been on the pod several times, said he's not shutting down his staking service, and said, regarding the SEC complaint against us today, we're proud to represent the industry in court to finally get some clarity around crypto rules. He's generally made the statement that he has tried multiple times to register with the SEC. They have not had a mechanism for him to register. They have tried to do everything by the book, and that the SEC approved their IPO filing, knowing full well the details of their business and their operating model, and still allowed them to go public on a U.S. securities exchange, despite full knowledge about their business. Chamath, does anything change this week based on the SEC's action, or is this just a continuation of, crypto has been rolled back and will continue to roll back here in the U.S.? Or is this something new and a new action and opens up a new front on the government versus crypto?
It's a good question. I think there's two ways to look at this. One is the conspiracy theorist way, which you see a lot of on Twitter, which is this idea that crypto is making all of these inroads as a replacement mechanism for fiat currency. And so governments are really now invested in trying to shut it down. I think that's largely untrue. And then there's the more simple, basic reality, which is that there was one part of the SEC that frankly didn't do the job that they were supposed to by either allowing a few of these crypto companies or crypto businesses to go public, either as standalone businesses or as part of other businesses, so Coinbase, Robinhood, etc. And then there's this part of the enforcement action after this FTX fiasco, which is a lot of CYA covering your ass by the SEC, especially because it looked like they had some cozy relationships with them. And so they're coming down hard, and they're going to go and systematically dismantle the largest actors, and they're going to go through the value chain. So I think the obvious place that they're looking now are the exchanges. They'll look at the custodial services. They will not approve any ETFs. And then eventually, I do think it trickles into all of the staking services. And eventually, I think it'll touch the venture community and all of those firms and funds that had a huge, robust business in staking these crypto projects in order to get coins, like founding coins and then being able to sell them.
JCal?
I mean, I've been talking about this since the beginning because I bought Bitcoin and wrote about Bitcoin when it was maybe 25 cents. And then again, when it was 100. So I've been following this for a long time. And I think thinking from first principles, just stepping back for a moment, what we do in technology is fundamentally disruptive if it's at its best, if it's truly going to be important in the world. And when you hear that word disruption, you kind of file it as a buzzword, but what it really means at its core is like competition. And it's not just competition disruption. When you say disruption, you're talking about existential competition. Two people go in the ring, one person comes out. Like somebody's going to get really fucked up. And people keep bringing up, oh, you're an investor at Uber. They broke the rules. They bent the rules. Uber was going against cabs. Airbnb was going against like hotels. WeWork was going against like long-term real estate leases. When you look at all those disruptive technologies and what they did at their core, they disrupted on behalf of consumers and lowered prices, increased choice, et cetera. When you look at crypto, the crypto crowd literally said, we are going to replace fiat currency. Fiat currency is the government. And so my thesis from the beginning was, if the government has a way to stop this, they do not want to be disrupted. What is a government at its core? it's a military, it's a bunch of rules, laws, and it's money. That's the kind of pillars of any government's power. We knew the government wasn't going to give this up. And, you know, they effed around and found out. But the truth is and this is where I have some sympathy for the crypto people, not the people who are just committing crime the whole way and just dumping these bags on retail, et cetera. But we do want to have this innovation here. There are some innovative aspects to it. But Gary Gensler said, listen, you already have electronic money. It's called money in the United States. We already have these services. You don't need this. Consumers don't need it. And you have to understand the SEC's function in the world to understand why they're taking this action. Their function is to protect investors. Investors lost a bunch of money. Therefore, they are going to retroactively inflict pain and hold people accountable for their mandate, which is to protect investors. You could have easily resolved this, the SEC. And the companies could have resolved this. The companies could have followed these things as securities and only allowed accredited investors, top 5% of the country, people who make over $200K a year. They didn't do that. They said anybody can buy these. Well, that's just not how it works in America. And it should change. I think everybody should be able to buy any security they want in America, just like anybody can go play blackjack. And the easiest solution for this just passed in Congress this week and will go to the Senate and be a law soon, I think, allowing every American, the other 94%, to take a test and become accredited. If that happens, you take a test just like you take a driver's license test. I know what diversification is. I know how risky these are. Once you take that 50-question test, you become accredited, and then you can buy these coins if you want to. And that's really the easiest path to resolution here. So we don't have Brian Armstrong move his company to the Middle East or an island in the Caribbean, which is what he's going to do, I predict. So,
okay, well, look, we've seen this bill make its way, I think, through, is it going to the Senate next or is it?
Going to the Senate. Yeah.
Going to the Senate next. So let's see if it gets done. I think it's a good point. One thing I'll point out, when individual investors were making money because all of these asset values were inflating, all of the coins were growing and were climbing in value, everyone felt good. There was an emergent cry that we all want to have access to these new instruments. We all have a right to make these investments and to own these assets. And then as the asset values declined and individual investors began losing money, the emergent cry is, where was the government to help save and protect us? And so the SEC, I would argue, was probably a little bit hindered when the market was inflating in being able to step in and take action, because that would have been counter to the cries of the retail market. But as the retail market took their hits, the SEC has to step in and Congress steps in and everyone starts to say, it's time to act. We should have acted sooner. And this was, fairly predictable.
I think what's happening is more nefarious than that. So the SEC is doing two different things. They're alleging two different kinds of crimes. One set has to do with protecting investors from having their funds stolen on these exchanges or at least commingled. FTX did that, right? Where they basically took customer deposits and stole them. What Binance is accused of is taking customer deposits, maybe not stealing them, but commingling them with company funds. That should be looked at, and I think crypto customers should be protected against that. However, the case against Coinbase, they're alleging a completely different set of facts, which is effectively what Gensler and the SEC are saying is that it is not legal to operate a crypto exchange in the United States. That is what the SEC is saying, because Coinbase has basically done everything right. And I believe that Gensler is far exceeding his authority in stating something like that. It is not up to the chairman of the SEC to say that Americans should not be holding crypto. Why, as a free people, should we not be able to buy crypto if we want to? Why shouldn't we be able to buy Bitcoin? Now, maybe you apply rules around accredited investor status. There should be protections against unsophisticated investors buying stuff or getting defrauded. That's fine. That's the framework that Brian Armstrong is asking for. But everyone should understand what the SEC is doing right now is basically usurping congressional authority. It should be Congress that makes the law. If Congress wants to ban crypto exchanges in the United States and prevent the citizens of the United States from owning crypto, let Congress do it. It should not be up to Gensler to do that. And the question is, why is Gensler going this far when previously he had relationships in the industry? Apparently, he was a consultant to Binance, and even worse, he was talking to FTX about giving them some special status.